Hi, everyone. This is Lawrence Watkins, and welcome to the Financial Juneteenth 5. These are my five most interesting articles as it relates to Black finance, wealth, and business for today, October 13th, 2020. Let's go ahead and get started. All right. So the first article today comes from ABC News, and it states stocks are soaring and most Black people are missing out. Nearly half of all US households don't own any stocks, and a disproportionate number of them are from Black and other minority households. So the article starts talking about that. It states that only 33.5% of Black households owned stocks in 2019, according to data released recently from the Federal Reserve. Experts say chief among them in terms of reasons why there's a split, because 61% of white households own stocks. But experts say that longstanding preference by Black investors for safer places to put their money, the legacy, some say, of decades of discrimination and fear. So John Rogers of Ariel Capital Investments, he had a quote in this article. He says, "We didn't have a grandfather or aunt or uncle or mom and dad educating us on the markets because they didn't benefit from it because of historical discrimination in this country." So he thinks that's one of the main reasons why that there's a split. Researchers also say the increased investment by racial minorities in the stock market carried through future generations could help narrow the wealth gap. Toward that end, industry groups are trying to encourage more Black people to become financial planners who could then draw upon those potential investors. So I found this article to be interesting, and it's something that we want to combat in the Black Business School, especially my brother, Dr. Watkins. So this is not our community. This is not the people who follow, of course, Financial Juneteenth, the Black Business School. But it talked about, there was a stat in here, I think over the last 10 years, if you would have invested, here we go, if you would have invested 10 years ago in the S&P 500, you would have received 260% returns on your funds in the last 10 years. So this shows the importance of stock market investing and what really separates the rich from the poor in this country, the ability to invest in things like stocks, real estate, yeah, more Black people need to start investing, and this article shows why. The next article today comes from Bloomberg. So this talks about Disney. So Disney's Kareem Daniel rises from intern to streaming Czar. So Disney is going through a reorganization because of the success of their new streaming platform, Disney Plus. So this guy, this man, Kareem, the native of Chicago's South Side, leapfrogged colleagues to become head of a newly formed media and entertainment distribution group. In that position, he'll make decisions over pricing, marketing, and how consumers connect with Disney Plus, the company's flagship effort to take on Netflix in the fast-growing business of online video. So Kareem is 46 years old. So the 46-year-old executive owes his rise in large part to his connection with Disney's new chief executive officer, Bob Chapek, I think that's how you pronounce his name, who said he first hired him as an intern years ago when Daniel was in graduate school. Kareem Daniel, he internship, so he has an impressive resume. So he attended Stanford University, where he earned degrees in electrical engineering and also an MBA from Stanford as well. He worked at Goldman Sachs, before joining Disney full time back in 2007. So this is interesting in terms of the reorganization, and congratulations for Kareem for taking this top job at Disney Plus. But this article about Kareem also reminded me of a podcast that I was recently listening to. It's from The Information, which is a highly curated tech news website, and it was called The Appiest Place on Earth. And in the article, it was talking about Disney Plus's success because they have experienced much success since they launched, whether that was a year ago or 2 years ago. I can't remember when they actually launched. But because of that success, there has been a lot of a turf war inside of Disney, where there's a lot of political infighting on who's going to control Disney Plus. So I believe the content division wanted to control it. The distribution or like television broadcast division wanted to control it as well. So it's interesting in terms of this reorganization. It's probably the outgrowth of a lot of infighting with what was going on in conflict with what was going on inside of Disney. So the principle, I guess, the principle of that particular point is, when there comes success, there's going to be people who want to grab and have land grabs as it relates to that success as well. So check this out. I'll post this article or this podcast episode in the link as well, or excuse me, in the description as well. The next article is a press release from Business Wire, and it talks about, do it like that. So it talks about Voya, so Voya Financial. Voya Financial launches new program to boost retirement savings for minority-owned businesses. Voya's new Just Right Advantage program seeks to increase retirement readiness for businesses owned by minorities, women, veterans, and members of the disability and LGBTQ communities, as well as nonprofits that serve them. So Voya research finds that 79% of Americans believe corporations should support minority-owned businesses impacted by COVID-19. So this talks a little bit about the program. So the Just Right Advantage program is focused on helping employers and organizations with undercapitalized, underserved, and undersaved communities by offering a fee credit when they establish or retain their retirement plans. So basically, when you sign up for their program, they're going to do a fee waiver, I believe. This quote came from Roddy O. Martin, who is the chairman and CEO of Voya. He states, "We believe that this is an important time to support the businesses and communities that have been most heavily impacted by COVID-19, including those owned by minorities and other underserved communities." Later in the article, it talks about some of, I guess, a few more quotes in here, but I think the most important piece is the eligibility requirements. So it says Voya's program builds on federal and state legislative enactments related to access to capital, business growth and resiliency, savings promotion, and retirement preservation and expansion for employers and organizations in undercapitalized, underserved, and undersaved communities. So to be eligible, entities must be certified minority-owned business, while nonprofit entities must be 501c3. Both new and existing plans must also adopt planned features to help support increased participation in savings. And it lays out some of the plans. So if you are a minority-owned business, Black business, and this interests you, the link will be in the description. So this came out today as a press release from Goya Financial. The next article, I guess it's an article, really a podcast, but is speaking with Ashanti Martin. And Ashanti, about 5 days ago, wrote an article in the New York Times about Black LinkedIn. And this comes from marketplace.org. So the article starts by saying workers at home and trying to navigate racial upheaval in America are turning to LinkedIn to talk about race and activism, especially as it relates to work. So Ashanti says Black workers are being their authentic selves on LinkedIn, and a lot of folks aren't sure how to react. The following is an edited transcript of their conversation. So I think this is a very interesting conversation in talking about being Black at work, because LinkedIn is really an extension of the workplace. And that's where you have your work colleagues and your work social network. And what does it look like to start being a little bit more Blackity Black when it comes to your interactions with your work colleagues? So I highly recommend this article as well. The last article today comes from Bloomberg Business Week, which is their weekly magazine that they purchased a little while ago. It states, lawsuit aims to ban menthols, big tobacco's bait for Black smokers. Activists and the American Medical Association are suing the FDA to bar the cigarette flavor used by 86% of Black smokers. I didn't know that the number was that high. I always hear comedians talk about, Black people and menthols, that type of thing. I've never smoked. My father smoked, for a long time, but I didn't know that just all Black people use menthol cigarettes in terms of 86%, which is almost everybody. But this is interesting. So it says, after more than 50 years of hooking Black people through DJs, rappers, and discounts, The fake mint known as menthol is still big business. But as America reexamines equality in this year of COVID-19, menthol, the last tobacco flavor allowed to be sold in the US market, and an $85 billion a year business for companies like RJ Reynolds, Altria Group, Philip Morris, and Juul Labs, is the target of a mounting legal efforts to force federal regulators to finally ban its sale. So that's interesting. I did not know before reading this article that this is the last flavored cigarette in that type of way, and it makes financial sense for these big tobacco firms to continue with it because $85 billion a year in sales is a huge number. But of course, this article shows that many corporations are targeting the ills of society on Black people, and they want to extract wealth. In this case, it's our human capital, right? So the more that we smoke menthols and the more that we smoke cigarettes and do other types of drugs, the less human potential that we actually have. And that causes a reduction in regards to our economic capital as well. So the article goes on to state, so 86% of Black smokers use menthol cigarettes compared to 46% of Hispanic, 39% of Asian, and 29% of white smokers, according to the FDA. So the ASH, the ASH is Action on Smoking and Health, along with another anti-smoking group, the African American Tobacco Control Leadership Council, sued the FDA in June for failing to regulate menthol cigarettes, despite Congress urging the agency to do so in 2019. Their legal battle got a boost on September 3rd when the American Medical Association joined the suit as a co-plaintiff. Then there's a quote from the AMA president. For generations, tobacco companies have promoted menthol cigarettes to the African American community, preying especially on African American youth. The results are clear and grim. Although African Americans usually smoke fewer cigarettes and start smoking at an older age, they are more likely than whites to die from smoking-related diseases like heart disease and stroke. So this is interesting, a very interesting article in my opinion, as it relates to using the law to ban and change things that are harmful to communities. And it also shows just the systemic racism that goes into corporate planning and corporate profits as well. And I think you should really read this Bloomberg Business Week article. And the link for this will also be in the description as well. So that's about it. Those are my top 5 favorite articles and most interesting articles for today, October 13th, 2020. Before you get out of here, please make sure that you like, share, and subscribe to the Financial Juneteenth channel. And also let me know how you like this segment. We're giving it a test run for another 5 weeks or so. And if you all like this just straight news type of format, we'll continue along with it. If not, we'll come up with something new and hope to deliver the best Black financial news to you and your family. So on behalf of Financial Juneteenth, my name is Lawrence Watkins. Take care, be blessed, and have a wonderful day. Bye-bye.